Welcome back to another episode of Summary Saturday. Today's episode, we're going to break down GJ and we're going to go through each day of the week and look for the potential trades we could have taken and the reasons behind those trades. The main indicators that I use in most of my trades are support and resistance levels. So stick with me for a few minutes while we deep dive this. Starting off on the 4-hour time frame, you see I marked those areas with the rectangular boxes. All I did was mark the lowest and the highest points. And when I use these boxes to mark up these areas, it's important to note that I never mark up the candle bodies themselves. I'll explain why that's important a bit later on. But if you do this, make sure you just mark the most average level of support and resistance by utilizing the wicks on the H4. These wicks are actually bodies on lower time frames. And what happens is if we drop down to the 1-hour time frame, we'll get a clearer picture of what's going on here. So as I mentioned, I simply mark the highest and the lowest point, right? And what we're going to do to determine trades, for example, if you throw your attention to this category over here, there are these mini support and resistance levels marking only the candle wick and not the bodies. So you'll see that immediately the market came to this point and literally moved up. One of two things can either happen when we see this. Either the market's going to break below this level, continue to move down, or the market's going to continue sideways, also known as consolidate. Third thing is the market will reject this area and continue to move. How do we determine where the market's going to move up to? Using the same idea behind support and resistance, take your rectangular box, mark up an area that has the most wicks. As you can see, again, I'm just looking left, marking up this area as an area of rejection. So now, if you're just focusing on Monday, you can see we have this range where the market has moved between. The graphs on the left show this, and the most recent one, which is just last week, shows that it had the same move from this area all the way to the other support area, back up to the resistance area. And with this strategy, you want to focus around the hours of 8 a.m. to 2 p.m. So for example, that would mean pre-London all the way to pre-New York. And the reason for this is that there's a lot of volume in the market at this point in time because, obviously the market is opening and there's going to be a rush of, supply and demand. As soon as the candle body breaks above and closes above this previous resistance, so between 163 and 165, we're looking for a trade. Additional to that is because if you look left, there's a lot of range in the market. This would have been our first trade for the Monday. We put our stop loss under the previous wicks, just below them. I usually aim for about 30 to 60 pips as a stop loss, with obviously your take profit being double at least. So your ratio should always be bigger than 2, never smaller than 2. As long as you have a consistent above average win rate, you will still make a profit. So in this specific trade, we see your first TP, a 1 to 2.5 ratio trade, which is about 120 pips. The other one would have been a 1 to almost 4 ratio. Now, after the Monday is finished, as we see, the end of Monday, the market rejected this level. So we're going to be looking for a short. There's no way we're going to look for a buy unless, like I mentioned, it breaks above 165. It will continue to the next resistance level. So looking at the Tuesday, we see that there was a potential for a sell at 8 o'clock in the morning when the market rejected this level once again. So granted, it did not move all the way, but the market's not always exact. It just gives you the indication of moving in your favorite direction, right? Based on what you observe. Had we seen this little mini level, and we would have put our entry anywhere below this level. So once we saw it retested, we put our stop loss just slightly above the key level, and then you will still have about a 1 to 3 ratio trade. And the reason for this take profit, we look left, we see there are zones whereby market is kind of either consolidating or rejecting off there by signs of long wicks. So that's why you would have taken profits early. If you're managing your risks, you would make sure that 60 pips in profit, you move your stop loss to entry, and then obviously as soon as you see it starts reverting backwards, that's when you want to take profit already. Then on Wednesday, similar thing in mind. Again, we're looking at the day from 8 to 2 p.m. and all we're looking for is either break above one key level to move up or reject the key level to move down. But as we notice, and this is important, we've seen that Tuesday's move did not go all the way to our support level, right? So the market moves in phases of higher highs, high lows, lower highs, lower lows. And in this instance, it made a lower high, but it made a higher low. So now we know the bias is to go long. So we either have to wait until it completely rejects and breaks below the previous support. So this is the level you're looking to either buy or sell. But like I said, the bias to go long was stronger since we saw a higher lowest form, which is this area over here, which is indication that the market's going to continue higher. Additionally, if you use your Fibonacci, FestX ABCD pattern, and what happens is as soon as the market enters this green area here, between the 50 and 78%, markets can hit your take profits. As we see in this instant, it hit both, right? Let's say after we took the short here on the Tuesday, we could have gone in for a buy again. That's kind of for another day because I'm focusing mostly on, as I said, the support and resistance levels. Since the market came back into this, or through this resistance level, which has been held strong for a while, we know that's going to reject that area, continue moving downwards. This would be your sell, and you would set your take profit. Ideally, this would be the first one, which is a 1 to 2 trade, or as I mentioned before, it always moves within a range. So since the week's range started over here, this could have been a nice long sell, but this would require a bit more managing. So you would obviously move your stop loss to entry, keep moving it further up the further the market moves, right? That's something that requires active managing, but let's just base it off the smaller scale of we just put a stop. We put our take profit on the first resistance level or key level we saw, which would be this level. Now again, we see we have about 80 per trade, adding that onto our 220 from previously. We're currently sitting on 300 pips profit for the week. So Fridays a bit tricky. Generally, you don't want to trade on Fridays because the market's coming to a close. I don't prefer it because it's also sporadic. My best times would be from Tuesdays to Thursdays actually, but it's up to you guys to decide what you're going to do about that. Looking at 8 o'clock Friday morning, we see we broke below our previous support as we saw on the 4-hour time frame, and like I mentioned, the reason for this one below is actually also built on previous market structure. Either the market's going to break below, continue down here, but we'd obviously have to look left to see how much range we have, because that would be the next area that will move to, which is actually what might be happening next week if we do break below here. Seeing some rejection wicks already, so you might not have wanted to take it, because again, it rejected on this level, and we put a short position. We would have placed something like this, and then we would have had our stop loss obviously, by the other key level, which in essence is not a good trade because now we're looking at a 1-to-1 ratio, and as I mentioned, we don't do 1-to-1 ratio trades, so you would not have entered that. It did form now a mini resistance level, again based on just the wicks. If we do ever come above that, it's going to come down to retest and it's going to start moving to another key level. That's a recap for the week, but otherwise, thank you for watching. I'll see you then in the next video.